Hey guys, what's up and welcome. In today's video we're going to be checking out two videos quickly before the end of the trading day. It's going to be Jason Ware on his expectations for Microsoft and Alphabet earnings. If you did not know, they release at the end of today, so make sure and watch this video before 4 o'clock. We're also going to be hearing from Carter Worth, the chart master, and he's going to be giving us a couple bull trap stocks to avoid. So as always, I hope you guys enjoy these videos. If you do, hit the like button, it lets me know, and let's jump into it.
Microsoft reports after the bell. As an investor, what are you focused on?
Yeah, so look, Microsoft and Alphabet have both been caught up in the AI, mania this year. So both the stocks have done very well. So I think first and foremost, investors are going to be looking for with Microsoft, is the AI hype coming through business results? Are we seeing meaningful growth because of AI? And if not, when is this going to occur? So I think first.
Before he continues, I just wanted to point out, guys, since June, you can see Microsoft is flat to down. That's pretty bad. Now, that does give a lot of room for the gap up on earnings and also the gap down. So let's see what else we're going to be looking for.
First and foremost, there's going to be a lot of focus on AI, as you mentioned. Second, cloud is important. Before the AI hype, before ChatGPT became, part of the lexicon, it was Azure Cloud that was driving results at Microsoft. So we're going to continue to look for whether or not Azure is not only continuing to grow, but we think there's a good chance that we could see an inflection this quarter. One, because if you look at the last 4 quarters, Azure has been slowing sequentially, and I think we might see a bottom here in this quarter. Two, the more we move to AI workloads, the more we're going to see these hyperscalers like Microsoft Azure probably see an uptick in their growth because these AI workloads require more cloud computing. So Azure is going to be important. And then I think third for Microsoft that we're looking for is just commentary around the Activision Blizzard deal. Look, it's now closed. What's Microsoft going to do with it? Where are we?
All right, so you're looking at a wide range of things, Jason, in general. I do want to ask you about the valuation of Microsoft, trading at a 31 times forward PE. Where have you been at in recent months? Have you been adding to your position, trimming, and what would you need to see from this report with this valuation to add more to this position?
Yeah, so we don't typically trade around earnings reports. We haven't been adding to the position. In fact, we've trimmed the position into strength recently, but we still have a meaningful position in Microsoft. We've been owners for a decade, and we're not looking to change our core position meaningfully. We still think it's a great secular growth story. But as far as valuation is concerned, look, it is expensive. I mean, as you noticed, trading at 31 times forward earnings, which is historically a couple of turns above its average PE multiple. So I think in order for the stock to continue to move higher, we're going to have to see a reacceleration of cloud. We're going to have to see some really exciting news around or business results around AI. So, we're somewhat neutral over the near term on Microsoft, despite being long-term bullish.
Neutral for now. Microsoft shares up almost 1% in the pre-market. Jason, want to pivot over to Alphabet, also getting set.
Before he pivots to Alphabet, Microsoft is one of the stocks I have been waiting to get a better price on. I've been watching it for 3.5 of the 5 months. I'm hoping it's going to go lower on these earnings, guys, and we'll get a nice sweep down, and I'll be able to buy it around the 310 area. Or even lower. The lower I can get it, the more shares I'll get. And this is going to be a long-term position I'm going to throw in the filing cabinet and lock up for 10 plus years, guys.
To report its results this afternoon, revenues forecast to increase by 10%, while EPS is expected to grow by 37%. Key part of its business, YouTube advertising, estimated to grow by 10%, offering a read on consumer spending and confidence in the economy. And like Microsoft, Alphabet's growth driver is the global cloud computing market. It is the third largest player, though JP Morgan says this business could be under some pressure as companies reduce their spending and look to optimize current cloud capacity. Jason, you also own Alphabet. What are your expectations for this report?
Yeah, I think it's going to be a good earnings report for Alphabet. Look, like you said, YouTube seems to be tracking quite well. So we think the growth in video spend is going up. They're benefiting from that core growth in search and digital advertising after, struggling there for a few quarters last year. Looks like it's, set to pick up as well. So we think we're going to have a pretty good core, business result from search. And then, like you said, cloud is actually growing faster for Google, even though it's not yet as profitable versus Microsoft and Amazon. So we expect a pretty good quarter for Google. They have a little bit more of an open lane in terms of their annual comps. I mean, if you look at the quarter last year, it was mid-single digits. So like you said, they're going to be a little bit better than Microsoft in terms of the growth rate. Valuation's not as demanding, trading in the mid-20s multiple. So we expect good
Right.
things from Google this quarter.
What do you think about AI when it comes to Alphabet? They released some AI products. They did not receive rave reviews by any means. A lot of people questioning their AI strategy. You think that Microsoft's going to see a bottom in a lot of its business due to AI enthusiasm? How does AI impact Alphabet?
In a lot of ways, look, as you noted in the spring, Microsoft had really taken over, the excitement around AI because of ChatGPT. It looked like Google was perhaps, the company that had the most to lose. That didn't last very long because at their I/O conference, at Alphabet's I/O conference in May, they really took back that narrative, demonstrating a broad suite of uses for AI, in particular, Bard. With regards to Google search. So look, I think the reality is that Google's an AI first company. They're going to continue to be an AI first company, and there's a lot of ways that AI is going to impact their business in a positive way, with core search being one of them, of course. So there's a lot of updates to be had on AI with Alphabet, and we're going to look at what they have to say in the quarter about how that's going.
Yeah, you mentioned with Microsoft, you were interested in commentary around the Activision Blizzard acquisition. When it comes to Alphabet, expecting any commentary about the regulation when it comes to Apple and search? I mean, that's a big part of at least their brand image, to be able to be the default browser on every iPhone, which of course is a very popular phone here in the US.
Yep. Yeah, it's a great position to be in for sure, but it's a costly position as well, as we've learned. So it's going to be interesting to see what what comments they may have around that. My guess is, given the fact that we're kind of in a ongoing trial situation, they're going to be somewhat limited in their commentary. But I wouldn't be surprised if analysts ask some management some thoughts around that. But I don't expect a whole lot to be offered up.
All right, guys. So we've got neutral on Microsoft earnings, and we've got very bullish on Google earnings, mainly centered around the PE. Microsoft is very expensive. Google is in the mid-20s, which is right in line. They both have right around the same growth. They're both going to be getting massive gains from AI. They're mostly software companies. And guys, that's just a little bit to add to what you already know about these companies if you planned on doing some buying before the end of the day. Now we're going to jump into Carter Worth, the chart master. Guys, you won't believe some of these stocks that are bull traps. Let's check it out.
Master says they're bull traps. Carter Worth is here to help us make sure we don't get snared. Carter, what are you looking at?
Never good to get snared. So, well, as distinct from value traps, which of course are weak stocks that are so tempting, they're cheap, and they end up being traps. A bull trap, and we'll look at some examples, is something that's been very strong, and yet the strength was a trap. It draws money in, it looks as though it's finally broken out, and it only reverses hard. So we're going to look at 4 or 5 examples, and then one that I think is a prospective bull trap. So if we go to the charts, we'll start with an ETF, and the first one here is the ITB, the home construction. This is now down almost 20%, but it's a textbook example of something that's strong. Remember, the market has yet to make a new high, right? Go back to its, and it tries to break out, draws in capital, and it's a trap. It reverses hard, down again 20%. Look at another ETF, another sector or theme. Look at XLI. It's the same thing. Now, it looks, again, people are positioned, it's going, it's making a new high, it's leading, there is no recession, the market can't make a high, but it is, and it only reverses. Now it's down some 11%. Let's go to a stock or two, the biggest one of all, Apple. Apple broke out. It had a lot of price target raises, upgrades, and yet it's down 13%, a classic bull trap. Or something completely different. Look at an alcoholic beverage like Constellation Brands. I'm trying to be eclectic in the choice to make the point that it's a circumstance that has no regard for market cap or type of business. It makes the high, it breaks out, draws in, and then it reverses. Finally, look at even different, yet again, cruise ships. I mean, Royal Caribbean's down 30%, and yet on a technical base, one could have made the case it's a textbook breakout. And so bull traps are just that, a snare. They're treacherous. Let's look at NVIDIA. It is a big stock that has broken out, and the risk here is that this too is a trap, that this is adored, it's loved, and
look how much room this would have to go to get back under this line. I mean, we're still in the 400s, guys. This would bring us back easily into the 300s in NVIDIA if this falls, which honestly, this formation does not look good. This does not look like a continuation pattern. This has obviously topped several times. And if we break this low, we should get a little panic flush, not to mention if you have bigger long-term buyers seeing this as a false breakout, guys.
And it is perhaps, and I think this is the right, if you're long, you got to hedge, and or just buy some puts and play for a speculative break. It looks like it has all the elements of a prospective bull trap.
Carter, may I ask you, in terms of the other examples of bull traps that have snared people, did you think that they looked like that they were going to reverse hard, or did it look so textbook in terms of the breakout that there was a moment in time where you thought, you know what, this could be it for these stocks?
So interestingly, happily, we did not publish on a single one of those names as a prospective breakout. And that wasn't necessarily great insight, a little bit of luck, a little bit of insight, but here's what it was. When all those stocks were breaking out, there were so many things that weren't confirming it. Banks and biotech and the Chinese market and so many things that were struggling. It felt like a trap. And so we specifically did not publish on any breakout candidates over the past 3-4 months for that very reason.
And that's specifically why I added Carter Worth and his chart master to this video, guys. He's very, very notorious for right calls. He pulls out the trend lines that just, you ask yourself how you didn't see it. He makes very good long-term calls. He keeps up with how the stocks are trending, how the economy is trending, how they're meshing together, what's working against them, what's working for them. And then he comes on here and makes broad calls, and they most of the time work out, guys. So if you're in NVIDIA, Carter's saying watch out. But that's going to be the end of the video for today, guys. I hope you enjoyed. I hope you learned something to make some better decisions if you're going to put some money to work today before the earnings, or else just enjoy the ride. I hope you guys enjoyed the video. If you did, hit that like button, and have a great rest of your day. Peace.